So, tech has a pulse. No, a real pulse after all. Yeah. Tech's been the weak spot of this market for ages. But today, the Dow tumbled 392 points, the S&P declined 0.21%, and the Nasdaq actually rallied 0.14%. Now, that was the 7th positive day in a row, but this time it was actually led by some stocks that have been hurting it. The beleaguered software and semiconductor stocks. They're making a comeback, at least today. Now, people have been flocking to the mighty Dow, bent on going with the bluest of blue chips, while abandoning anything that seemed expensive, including most of tech. Today, though, it sure looked like tech's finally gotten cheap enough to survive even the toughest downgrades. But make no mistake, this is a counter-trend rally. The companies that have reported so far, chiefly the large banks, have been superb, even as it was overshadowed today by the disappointment from Goldman Sachs. It was a bizarre and, frankly, hopefully aberrant conference call filled with distractions. Frankly, I think Morgan Stanley up nearly 6% is a bigger deal than Goldman down 6%, if only because it finally dawned on people that Morgan Stanley is becoming a repository of wealth management, not just a firm hostage to trading or underwriting. Morgan Stanley isn't leading the pack of banks, it's leaving the pack behind, which is why it's not getting a higher price earnings multiple as a reward for its more consistent business, but ultimately will. More on that later. What really matters today is that the decline in the Dow masked a robust session for some of the more forlorn parts of the Nasdaq. And that strength deserves an explanation.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.